It's Brian Preston, the money guy.
This next question, Brian, is from Mac. Is from RJ. I touched the mouse and it shoots all over.
I looked over there and I see your
shoots
screen.
all over. The entire content team is losing their mind right now laughing at me. All right, this is from RJ, and this is one I think that's really interesting. RJ says, I'm getting outbid by full cash offers in the housing market. What should I do with short-term savings to protect from inflation to maybe get a full cash offer myself? So RJ's one of these people who's trying to buy a house right now. And there's all this competition and all these people coming in. I'd love for you, Brian, to speak to, if I'm someone in that position, what should I be thinking and what should I caution myself against doing? And then, man, well, what if I just took my down payment money and I just went and put it into something like a Tesla or a Bitcoin and I tripled it over the next 3 months? Well, then I could pay cash. Should I do something like that? How should I approach and think about those types of things?
This is where you're going to get me in trouble because are you sure this wasn't written by Team Crash?
What's funny is I looked at him 3 times when I was asking this question.
Team Crash over there is very excited you asked this question because we have, I love that our growing workforce, we have a lot of employees that are obviously trying to do the same thing RJ is,
Sure.
is that trying to buy your first house. And then in this economy, goodness gracious. I mean, it is just what's happening to first-time home buyers. I feel for you guys because in the past, you had to not only compete with just other young people trying to buy their first house or just anybody who's interested. Now you're competing against institutions and others who are doing this for investment. They usually have big pots of money behind them. It's frustrating. And here's what, and I don't like the trend of no appraisals, no due diligence, and then cash offers. Because this stuff sounds so frothy that we're losing our mind, and common sense is out of the equation. So I tell Team Crash people or people like RJ who are struggling, I do want to give you the comfort of knowing, look, I think inflation, because of what's going on, interest rates will start going up. And interest rates directly impact mortgages,
Sure.
and we'll see how. I know a lot of people are saying, look, there's cash. But these institutions, they are very sensitive to interest rates too.
Yep.
So I mean, cash, when interest rates go up, we'll see how frothy things really are because there will be a direct correlation to where interest rates are with what happens in the real estate marketplace. But I would tell RJ to, and this is going to sound, he's going to be like, oh, this isn't the answer I was looking for. I would know what you can afford. And we know, look, we tell you traditionally you can afford 3 times your income, 25% of your gross income. We understand in this crazy marketplace, maybe it gets pushed up to 4 times your income, but you do need to know where the guardrails are. And we give you the grace of knowing that first home purchase, you only have to put down 3 to 5%. You don't have to put down the 20%. I know you're saying because you want to stand out, you're talking about doing a full cash offer. Just be careful that you're keeping the common sense to the equation because I don't want you waiving, like I said, the due diligence, the appraisals, and other things, because I don't want you buying the poltergeist house that's, on the burial ground that you'll never be able to get your money out because you got so worked up on this. Keep your head about you. This too will pass.
That's a great,
because that's the thing. Everybody gets in a hurry and we get caught up in these trends. And I'm just old enough and wise enough that I'm like, things adjust. I can remember when I was in my 20s and one of my friends' parents bought the lake house, and I found out how, and we got to go on this, and I'm still the poor kid who's got friends whose parents have a little money. I'm like, how am I ever going to be able to afford something like this? And I've had a little maturity that's hit me that's realized, yes, things can run from you from inflation and other things, but it's amazing how reversion to the mean typically corrects things. All things typically get adjusted. So that's why I tell you, if you have good principles, good common sense, you will not get caught up in this. But I think RJ's, and this is you're saying, bring it back, old man. Quit wandering in the woods. RJ wants to know what to do with his cash, and because there's a lot of temptation to go buy into the get rich quick, cut the corner off, because you saw how much Bitcoin made or how much buying individual Tesla stock or even getting into options.
Sure. Yep.
The problem is those things, the reason you get rich off of those things potentially is because there's tremendous risk and there's just as much opportunity for you to actually lose that principal. And a lot of times that's why I always tell people, are you a short term? Do you need that cash for short term, midterm, or long term? If it's short term in the next 3 to 5 years, you better keep it pretty liquid.
Yep, that's exactly
because
right.
even bonds can lose money. We had a client that came into some cash. They knew they needed to roll it into another house or something, and they're like, hey, why don't I put it in this bond fund? And I'm like, you realize bonds, now they're not going to lose like equities do, but if interest rates go up, you can lose money in bonds as well. We need to stay in this boring, unsexy cash holding because you need the money.
Yep.
I would just tell RJ, don't lose your mind on the real estate stuff, but then also if it's cash that you know you need access to, just
Gotta
maximize
stay
how
liquid.
cash can be, or an online bank that's still FDIC insured. I know that is so lame, so boring, but that's why we give you the flexibility and the grace with a 3 to 5% down payment. It's just you got to make it through the madness of this current real estate marketplace.
That's exactly right. Now, RJ, good luck. It's a tough one out there, but you're doing awesome, asking the right questions.